and I want to bring you greetings from WMATA's General Manager, Mr. Randy Clark, as well as our Senior Vice President and Chief of Procurement, Ms. Suzette Moore. So let me talk to you just for a few minutes before we get the show started. I want you to know that as a member of the business community and a resident of the Washington region, you understand the importance of Metro in keeping your company and the entire region's economy strong. We have over 91 rail stations across Maryland, Virginia, and the district, and we have more than 1,500 buses operating 325 routes. Metro provides critical public transportation for the region. But our impact is a little bit broader than that. We knit the region together. We enable employment and housing and shopping and entertainment across the communities. We try to boost the property values and increase tax revenues near all of our stations. We save workers hundreds of hours, thousands of hours each day that would be lost in traffic. And we save families hundreds of millions of dollars per year in car expenses by taking Metro. Metro could not provide these regional benefits, though, without the business support, the business community support. You provide Metro with the tools and services needed to keep the system running safely. So we rely on companies like yours to assist with functions like the IT, bus and rail maintenance, new construction, planning, and real estate. So I just want to say thank you so very much for all that you do. I want to thank you for showing up today, for being a part of our outreach collaboration with the DC Small Business Development Center Network at Howard University to bring you Demystifying Taxes for Small Business and Freelancers. This is be done by Ms. Wendy Kaplan Carroll, the co-founder of Square Biz Group. We are always so happy about this collaboration because the DC Small Business Development Center Network adds so much support and value to the success of all small businesses. I want you to also remember that at WMATA, certification is the key to participation. And we encourage all of those not certified small businesses to get certified with WMATA. We have 5 socioeconomic programs that you can be certified in. We have the disadvantaged and small business programs on our federal side. And if you don't know, we now have our non-federal local programs, which is our minority business, small and micro business programs. So please make sure you check out our website because we are definitely open for business and we want you to be a part of our contracting opportunity. Because remember, we are your Metro, the way forward. Also today, please put all questions in the chat. It is very important that you put all of your questions you might have in the chat so that way we'll be able to get to them at the end of the presentation. Remember to fill out your surveys that will be sent to you after the outreach event because these surveys help us to plan events that can benefit or support your business growth. So thank you for attending. Now, this is my favorite part. I want to introduce a wonderful friend of mine, Mr. Charles Mott. He is the Associate Director of the DC Small Business Development Center at Howard University here in Washington, D.C. Charles has over 35 years in the aerospace and management consulting industries with large and small firms in management and team leader capacity. He is knowledgeable on small business management with over 25 years of experience working in leadership and management as a business owner, an employee, and a consultant with small firms. He is currently the director with the DC SBDC in Howard University. He works directly with the executive director in planning, implementing, managing, evaluating, and reviewing the reporting activities throughout the DC network to the U.S. Small Business Administration. He counseled thousands of small business clients, providing technical assistance, training assistance, and with access to capital and business research. So at this time, I would like to bring on my friend, my partner, Mr. Charles Mott.
Michelle, thank you so much for that great introduction. And also want to say thank you for the partnership with Metro. It's been a great ride these last couple of years, and I know that all attendees on these joint presentations with Metro have benefited from the materials that they've seen and the speakers that have presented. So it's been great. A little bit about the SBDC for those who are on the webinar who don't know about us. We like to say we're one of the best kept secrets out there. But we are a grant-funded program through the Small Business Administration. We're not the SBA, but we're a resource partner um, similar to SCORE or the Women Business Centers. We're one of those resource partners that provide free counseling, technical assistance, and other services to small business in the District of Columbia. We are one of 63 networks across the U.S. and in U.S. territories that provide this service. We serve the District of Columbia business owners and are proud to, as mentioned, collaborate with Metro on this webinar series. I have the pleasure today of introducing a speaker. I promised her I wouldn't read her full bio, but I will provide an excerpt from it. So Wendy Kaplan Carroll is a marketing and sales leader with deep experience and knowledge of the small business marketplace. Wendy is the co-founder of Square Biz Marketing, which specializes in helping brands connect to small business locally. Wendy also works with small business owners and entrepreneurs, teaching and coaching them how to be successful strategically while staying true to their passions. Wendy has been quoted by Fortune Magazine, Crane's Business, Newark Star Ledger, and the Newark Enterprise Report. She's done numerous webinars for us as an SBDC, and also she is now doing her first webinar with Metro. So with that, I turn it over to Wendy for the webinar. Thanks, Wendy.
Thank you. Oh, thank you both so very much for this opportunity to work with you and present and teach. And I will say happy tax time, folks. I am here to make tax time easier and demystify it for all. So, yes, I hope you all see my screen right now and we will get into it. If you have questions, if you could just put them in the chat. Following the presentation, I will answer as many as I can. I also have some incredible resources for you. So if I can't get you the answers, I know that I will be able to get you the answers. So let's get started. The main thing I want you to know is this is really all about empowering you with more knowledge so that you can walk confidently into tax time, as well as manage your finances all through the year. So I am actually speaking on behalf of my client, my client Lily Banking actually provided this great information. So throughout the presentation, you will learn a little bit more about Lily. Is anyone else having trouble hearing me? I did see somebody come up. Charles, can you hear me okay? You'll be my tester.
I hear you just fine.
Okay,
Yep,
great.
I can hear
Thank
you
you.
great, Wendy.
Awesome. Okay, let's get started. So this goal session is really to give you a baseline understanding of taxes, the tax prep process, and what you need to do to file your taxes, as well as offer you some best practices and helpful tips. So we're going to review basically your tax responsibilities, some documents you'll need. I'm going to discuss with you about business expenses and deductions and why they matter so much, and give you like a very basic understanding of how you file and how Lily can help as well. So I think you'll find this pretty easy, and I'm excited to get started. So Lily, just as an introduction, if you don't know about Lily, Lily is a financial tech company, which is a platform that includes banking and bookkeeping, like so that you're able to actually keep track of all of your expenses. You can invoice, you can collect your payments there, and there's even tax planning tools. So it's a really, really easy way to run your business, and it's a very low cost. For $20 a month, you can be a part of the platform. Okay, so let's get started. So as a rule, we need to pay taxes. And I want everybody to understand that for any self-employed work that we do, so anything we're doing, if we're a freelancer, sole proprietor, any self-employed work that we do, the moment we make more than $400, we are required to file for self-employment taxes. So I want everybody to understand that. The threshold for our federal income taxes is a bit higher, but we always recommend, even if you make $0, you should still file so that there's a track record of your history. So our general tax responsibilities are paying federal income taxes. We all pay them as individuals. So all the dollars that we make through our own businesses, we are then paying as individuals on those earnings. As small business owners, just as a note, we actually are paying taxes not on a weekly basis, but we pay quarterly estimated taxes. So 4 times a year, we're paying our taxes. Additionally, we are responsible, as I mentioned, if we make $400 or more, we have to pay self-employment taxes. If you have employees, you are paying employment taxes. And then depending on where you live, you may or may not have state income taxes. For purposes of this presentation, we're really going to focus on our federal obligations. So some documents that you need to start collecting if you are getting ready for tax time now, which I really advise you to start doing. These are the things you will need. Now, I will tell you, and I'm going to talk about it a little bit in this presentation, but I do recommend that you work with an accountant, especially if you're just getting started as a small business owner, et cetera. It is a worthy investment for you to make, because I just think it's going to give you some security in knowing that your business is set up the right way and that you're filing everything you need to file as a small business owner. But we'll talk a little bit more about that. So the documents that you'll need, you're always going to need last year's tax return. You're going to need, obviously, your tax ID number. And then you need accounting records. You need to be able to assemble your profit and loss. So basically, how much you brought in and how much you spent to run your business. So that's going to help you determine your profit and your loss. You'll need a list of all of your business expenses, and we're going to talk about this as we go through this presentation. If you happen to be registered as a C corporation, which is, a larger corporation generally, you need a balance sheet. You'll need documentation of your payroll documents. So if you're paying full-time employees or if you're paying contractors, you do need documents of all of that. You need your business asset information, and then you want to assemble your banking and your credit card statements so that you have all of these records together for either yourself to put together your taxes, or if you're working with an accountant, these are the type of forms that you're going to need. Now, let's talk about business deductions. So we are allowed as small business owners to take business deductions. And these are the deductions, these are the business expenses that we are using to operate our businesses. So the IRS allows us as small business owners, they say if an expense is deemed usual and necessary to run your business, you are entitled to take that expense as a business deduction. So these are things like marketing expenses and office supplies, et cetera. And I'm going to get into that a little bit in the next slide. But I really want you to understand that our earnings that come in, so when we make money, we're getting paid, and that's called our gross earnings, right? So we're bringing in $100, let's say. Hopefully it'll be a lot more than that. We're bringing in $100, but we are also spending money to operate our business. So let's say we're spending $50. So that 100 minus 50 equals our net income. And our tax calculations actually start at our net income. So by making sure that you account for every single expense that you are entitled to, you're actually going to reduce your net income, right? So gross earnings minus your business expenses equal your net income. It's also really important to be keeping track of your expenses, because you want to make sure that you are making more money than you are spending, right? So you want to make sure that, you want to take a look at your books and be able to say, wow, I'm overspending on some things that maybe right now I shouldn't be spending on, because I'm not making as much money to actually, account for those expenses. So you want to make sure that you are not only tracking your expenses for taxes, but also for the health of your business. So deductions come from business expenses such as, I'm going to give you some common ones. Your particular business you're in may actually have something that I am not entitled to. And this is also why it's really important to talk to an accountant. But some business expenses are things like hardware and software costs. So for instance, I bought a computer this year, and I was able, this is my business computer. I operate my business off of this computer. I was able to write off the cost of this computer as an expense. Any office supplies, I like pads and pens and print. I need printer ink and, all of those things that we're getting from the office supply store, those are considered business expenses. So make sure you're documenting it when you're running off to Staples to buy, paper clips for the paperwork you're working on. Make sure that you document that. Any subscriptions or dues. So if you are, for instance, if you joined an association, so let's say you're a professional business coach and you joined a coaching association, the dues for that association would be considered a business expense. If you subscribe to an industry newsletter, if you have a subscription to, an online, and this kind of segues into software, but for instance, I have a subscription to Adobe software. So that subscription can be counted as a business expense. It also could fall under the category of software. Marketing expenses. So we have to market to be in business. We have to market ourselves, whether it be a email service provider we're using for email marketing, if we're buying Facebook ads, the URL that we spend, we buy, and we host our websites on, all of those things are marketing expenses. Business cards, if you bought mugs with your logo on it to give away at an event, all of those things are marketing expenses and can be counted under your deductions. I'm going to hold on utilities for a minute, and I'll come back to that. If you take a client out for a business meal or a prospect, that business meal can be counted as a business expense. If this event today was an event where you actually had to pay, this could be considered a business expense. There's also professional expenses, like the fees that you're paying an accountant or a lawyer. If you pay for a marketing consultant, that could be considered under your marketing expense. So there's a lot of expenses that you are investing in your business that need to be accounted for so that you can actually, number one, track your profit and loss, and number two, use as deductions. I'm going to get into two specific things, car mileage and home office space, and then I'm going to tie it back to utilities. So if you are working from home, and this is not somebody that is working from home that is collecting a paycheck from an employer. This is if you are working from home and running your business. So I run my business from home. I have a dedicated office space. So I am able to write off or deduct from my profit a percentage of my mortgage, essentially. So the IRS has simplified a method that lets you deduct $5 per square feet capped at 300 square feet, which is a total of $1,500. So think about your home office, what percentage of your total square footage you're using, and then that, if it's 200 square feet, you're able to write off that as a business deduction. Now, I'm going to tie that back to utilities. So we pay electricity, Wi-Fi. You might even have a landline that you use in your home, although a lot of us don't even use those anymore. So what I do and what my accountant and I do is I take all of my utility bills, so my electricity specifically, as well as my Wi-Fi. And if I account that my office space is 20% of my total square footage, I take the total at the end of the year of those utilities, and 20% of it I account and am able to use that total of 20. Let me start over. I'm sorry. 20% of my utility bill on my electricity and my Wi-Fi, I apply as a business deduction. I hope I didn't confuse everybody. So you want to take the square footage of your home and then take the total of your bills and deduct that square footage and apply that as your business deduction. And this is a case where I ask you to please confer with your accountant about that. Now, a couple things to note. If you have a full-time job and you are a freelancer as well, you are able to take this deduction. So any money you earn as a self-employed individual, you can take this home office deduction. Again, this is not for a work from home, if you're hybrid working a couple of days and then going into the office, no. But if you are running your business or any self-employed work from home, you're eligible for this home office deduction. Now, car mileage. We use our cars to go to work, to see clients, to go to events, to network, etc. So what really matters is the mileage, not the frequency. And just to simplify things for you, the IRS allows us 2 ways to deduct mileage. So if you are driving a car let me start by saying, the IRS does not like us changing the way we deduct our dollars, right? So if 1 year your standard rate, you should stick with standard rate for a few years. They don't like to see us flipping to different methods, year by year. So standard rate means by miles. So you might actually be taking the car to the metro to go to your meeting. So the miles to get to the metro, you can count as mileage towards your standard rate, as long as it's a business purpose, you're traveling. So this year, it is a 65.5-cent mile deduction. And you want to make sure you're tracking your mileage. So anytime you're using your car, you do get this mileage deduction. Again, I want to just preface, if you're leaving your house to go to an office where you work, those miles don't count. But if you leave your office to go see a client, to go to the metro, whatever it is, you can deduct that mileage for a business expense. The other method is called an actual rate method. So this is basically this is a total percentage of all of your vehicle expenses. And what I would say is, this is the case probably if you use a vehicle, like if your car is, maybe you have a truck you're leasing to service customers, the standard rate, the actual rate method might be better. This is a case, again, where you really should talk to a professional accountant about which method is best for you. I want to mention there is an app that I've been using to track my miles. It's really great. It's called Mile IQ. So it's downloaded on my phone. It actually is tracking as I'm driving. And when I'm finished my trip, it'll say, was that a personal trip or a business trip? And I swipe to the left if it's personal, swipe to the right if it's business, and it's tracking it's logging all of my business expenses. My business miles. So Mile IQ. All right, so I just want to give you some scenarios. And this is very, very broad, but in this case, we're looking at self-employment taxes. And in scenario A, we tracked 0 business deductions. So our gross profit was 75,000 and our net profit was 75,000. And on that 75,000, we owed 11,004 to self-employment taxes. Now in scenario B, we had $25,000 in expenses with a net earnings now of $50,000, and you can see how reduced our self-employment obligation was. So tracking our business deduction is going to be very key in helping us actually limit our tax, or leverage and optimize what our tax obligation is, as well as, just as importantly, track the profit and loss of our businesses. I know there's a lot of questions around deductions. We'll be answering at the end. And I also have a great resource for you at the IRS who can help answer any questions on deductions. So I do want to give a little plug to Lily here. So with the Lily Financial Platform, every time you use your Lily card, so remember, the Lily Financial Platform is a banking system incorporated with a bookkeeping system. So any dollars that you use within that bank account, every time you make a transaction, it is recorded instantly, it is categorized instantly, and at the end of the year, it easily allows you to see what your expenses are, and like you're pretty much ready for tax time. So if you do all of your banking within the system, it really is going to simplify your tax time accounting. In fact, they even pre-fill some forms for you, which I'll tell you about as we go on. So I want to take a minute to talk about self-employment taxes. Again, once we earn over $400, we are responsible for filing and paying self-employment taxes. And what are self-employment taxes? So as a full-time employee, when we work for somebody, one of those benefits is that our employee and we're splitting the cost. They're paying 50% and we're paying 50%. But when we're a business owner, a freelancer, we are responsible for 100% of this. And our self-employment is covering our Social Security contribution as well as our Medicare contribution. And the number itself it's a crazy number, but I will tell you, we're looking at the net earnings, again, minus our business deductions, we have our net earnings. So our self-employment tax is 15.3% on 92.35% of our net earnings. That's how you calculate it. And again, money is going into Social Security as well as into Medicare. And after, once we make over $400, we must pay our self-employment tax. So this is something, as a small business owner, we all have to be aware of. This is an obligation that we pay. Now, I want to also highlight from you, once we get to our federal, we're filing our federal income taxes, there are other deductions that we are taking. Honestly, I didn't pay too much attention to this in years past because my accountant was asking me these questions. Now I understand. So once we have that net earnings number and we are focused on our federal income tax, there's more deductions. The first round of deductions are called the above the line deductions. And these are things like retirement account contributions, if you're still paying student loans, the interest on those student loans, health insurance premiums, and remember how we just paid self-employment taxes? Well, we are actually able to deduct 50% of what we paid as an above the line deduction. So net earnings minus our above the line deductions equals the AGI, or adjusted gross income. And now we have another series of deductions. So we take from our adjusted gross income, we take additional deductions. And there's two ways of doing this. So, and in this case, by the way, you can change for whatever makes sense for you each year. So we have something called standard below the line deductions, and everybody is entitled to these. And it depends on your filing status, what that number is. So we all file, whether we're single, married, head of household, we all have our individual filing statuses that we file when we pay our taxes. So the government gives us a standard deduction. There's also itemized deductions. So you might look at the standard and say, wow, itemized deductions such as charity donations, state and local taxes up to $10,000, mortgage interest and real estate taxes, and unreimbursed medical expenses may add up to more than that standard deduction. In that case, you or your accountant would take the itemized below the line deduction because it's going to, it's going to be significantly more than the standard that we're all entitled to. So it really depends on your situation. So we have our taxable income, right? We're going to determine this now because we have our adjusted gross income. We're subtracting that below the line, whether it's standard or itemized. And now we have our taxable income. So that's how our federal income taxes are determined, how much we're going to pay. And I'll show that. I just want to recap. We have our gross profit. We subtract those business expenses. We get our net earnings. Then we filed our self-employment. Now it's time to look at our federal income tax. We have our net earnings. We subtract our above the line deductions. Now we have our adjusted gross income. We have our adjusted gross income. We've subtracted the below the line deductions. Now we have our taxable income, which is going to be, if we made $75,000, our taxable income with all of those deductions is actually going to be less. And now what happens is we go to the tax brackets. America is a progressive tax system, meaning we don't pay the total lump at a tax so if we made, looking at this chart, and I'm looking at the single category, let's say we made our taxable income was, $95,000. We're actually not paying the total $95,000 at the 24% rate. We're actually breaking the dollars within the brackets and going down the brackets with each percentage. So it's that's how it's calculated. So it's a progressive system. We're paying the tax rate within each bracket. I know that's confusing, and I hope I didn't confuse you more, but I just wanted to give you a general idea. So with Lily, as a best important practice, you need to put money aside for taxes. I recommend 20, 30%. Put it aside. You get paid, automatically put it aside. So you don't even have to think about it. Lily automatically will do it for you. But if you don't use Lily, find a system that does, because you just have to remember, if you make $100, you're going to owe taxes. Put $30 aside and, use the 70 to live on. But you have to put money aside for taxes because you're going to be, you need to pay your taxes. Again, I think with this automatic savings, it just makes it easier. You don't have to think about it. And what's really cool within the Lily platform is if you did need the cash, there's no fee. You can move it back into your own tax, or your own checking account. State income taxes. Your business, it may need, and you as an individual may need to pay state and local taxes. Everything depends on where you live. I would basically tell you, please find the link to your tax authority. Here, I will be sending the slides. You'll get a slide. There is a website. Each state has information. I will tell you that most states are just like the federal, meaning it's progressive. So it's very, very similar. But understand what you're in, what you're going to need to pay both state and local. Really important. Okay, now the fun part. It's time to file taxes. And I want to give you just a basic, very high level of some of the forms that you're going to need to be filling out, or the forms your accountant's going to be filling out. So forms are really going to depend upon your business entity's type, how many employees, your industry, etc. So the different types of businesses are sole proprietors, LLCs, partnerships, there's S corps, there's C corps, and I'm just going to highlight for you a couple, like sole proprietor. So this is the individual that has not incorporated their business as an LLC. You're operating under your own social security number. You are the business. You did not set up another entity. So these are the forms you're going to fill out. You are going to, number one, you're going to fill out that Form 1040 Schedule C. That form is the form that's going to show your income and loss. So that the loss is basically all of your expenses, right? So you're going to be filling in this form that's going to determine what your net income is. Following that form, you're going to be filling out the Form 1040 SE, which is your self-employment. You are also, based on this, going to be filling out the Form 1040 ES. This is the form that calculates your business's estimated taxes. So the taxes that you are estimating that you're going to eventually be paying in 2024 are from your earnings from 2023. So that's how your estimated taxes are filled out, or sorry, how they are determined. And then it all boils into our individual income tax form that we fill out, that Form 1040. We might be filling it out jointly with our spouse, our partner, but everything funnels into that. Now, if you are set up as an LLC, the IRS automatically treats LLCs as pass-through entities for income tax purposes. We pay taxes on profits and losses through our own income tax returns. If you are a multi-member LLC, so if there's a couple people within your LLC, if you have a partner, etc., we're going to talk about that, what we need to fill out in the partnership slide. But these are, I'll tell you the truth, the common forms that you complete as a solo LLC are exactly the same forms that we use as a sole proprietor. However, we're using the tax information of, the tax ID is of what our LLC is registered as, and the name on that form is our LLC business name versus our personal name. Once all of those are filled out, these forms, the Schedule C, the estimated taxes, and the 1040 self-employment taxes, it all funnels into that individual tax form, that 1040. So this is what we would fill out as an LLC, as a solo LLC. If you are a partnership or a multi-member LLC, you are filling out similar forms. You're going to be filling out that self-employment. You're going to be filling out your business's estimated taxes. But partnerships also fill out partnership tax returns, partnership income tax returns, which is essentially the Form 1065. So that basically will show in that form the income your partnership raised as well as the loss, those deductions. That form then rolls into the Schedule K1. So when you have a partnership, one partner is going to be X percent and another partner is going to be another percentage. So depending on what percentage a partner owns, the Schedule K1 will indicate how much income the partner is responsible for recording or reporting into their 1040 form. So these are the forms that you would use as a partnership. And then if you happen to be set up as a S corp, S corps actually are set up when, you're actually paying yourself a W-2 salary. So there's some definitely some distinct forms you would be filling out. But you're going to see the same forms here as well. You're going to see your 1040 ES estimating your taxes. You're also going to have that K1 form that's going to indicate how much you actually are responsible for. You are also going to be filling out a form 1120S, and then it all filters again into your 1040. So again, these are forms that you as an individual are going to fill on behalf of your businesses, or this is what your accountant's doing. Knowledge is power. We need to understand what forms we're responsible for. Lily actually does pre-fill tax forms for you. So it fills out, if all of your business is happening within your Lily account, it actually fills out your profit and income form. So it will calculate all your business expenses. It'll calculate all your income received, and then it'll give you that Schedule C. The Form 1065, that is for your partnerships, and the Form 1120S, which is for your S Corps. So a really good way to easily have your taxes already sort of like some important forms already filled out for you. Now, there's a lot of information I just threw at you. Again, my goal is to simplify things, and I hope I did that. And also to enable you to have some really empowered, knowledgeable conversations with your accountant. I highly recommend you use a CPA. I think they can really help you during tax seasons in multiple ways. They can offer you expertise, they can maximize your deductions, and they can really ensure that everything is filed for you. I also want to mention, again, the cost of an accountant is actually a business deduction. So at the end of the next year, if this is your first year of working with an accountant, you can use that expense as a business deduction for next year, and make sure that you're accounting for it if you've used an accountant in the past. So if you don't have a CPA, I would urge you to seek referrals, and I would urge you to sort of get started soon, because they're getting really busy and we have deadlines coming up. Find the right CPA for you. Find somebody that's willing to have, for me, it's important that my accountant actually talk to me, because I'd like to have that conversation. So find out what works for you best. If you are, there's a ton of online software that you could do this yourself. For me, it's important to have an expert guide me, give me the resources and the expertise that I really need. And I just think for a small business owner, it's a great investment in you and in your business, because this can be stressful. I'm not going to lie. We know that having an accountant definitely is somebody that you can rely on to ease the stress a little bit. I know this is like an eye chart here. It's very difficult to read. You're going to get the slides, but we do have deadlines coming up. I do want to mention, if you are a multi-member LLC, an S Corp, your deadlines for filing your taxes on the business part of your life are due on March 15th. Your individual taxes, where you're going to reporting all that income, is due on April 15th. For sole proprietors, you are also due on April 15th as well. So you'll have this deadline chart, and I hope it'll help you as you organize your tax time filing scheduling. I have incredible resources for you. You can go to lily.co/tax hub. They have great resources. Also, email me. I have made an incredible contact at the IRS who has provided me with great resources. I will probably be able, I'm hoping to get that information over to for the follow-up of this email. For the follow-up of this webinar, but it may not be ready yet. But I have some great resources, and actually somebody you can talk to as well. So
for you not to be that little IRS person or everything, you was answering, girl.
I was a little
answering.
stressed.
So
I was a
I
little
just want to
stressed.
say thank you so very much for everything. Thank you.
Thank you.
I
And
want to
thank
say
you to
thank you on
Charles
behalf of the,
for
well,
helping.
thank you, Charles. Look, Charles, no, I'm going to thank him. He
Oh,
just know
I'm
it.
thanking him.
I also want to say thank you so much to our audience for showing up today. Because when you show up, that means you're showing up for your business because you're invested. So stay tuned because you will receive information, that Wendy's given out so that the resources from the IRS will be able to help you with a more detailed one-on-one questions and things of that sort. I just want to say a big thank you to Charles and Wendy today. Oh my goodness, I really appreciate this class and the time that you've taken to be with us. I'm always going to give a big shout out to my Small Business Programs Office Certification and Outreach team. They always do such an amazing job. Marlo, Michael, Shanae, I just want to say thank you for always making sure we stay connected with our businesses. And to the businesses, I hope you were able to learn some important information to help your business grow today. Know that we look forward to seeing you at our next outreaches, so please visit our websites and stay tuned. We have upcoming outreaches. They just put the screen up for you. Thank you so much, team. That'll be from, you'll see RFP to NTP, Proven Strategies for Successful Procurement. And that's going to be on February the 29th at 9 a.m. So please make sure that you get registered because this is going to be awesome. When you're talking about making sure that everything is doing good for your procurement process when you're doing these bids. So you're going to want to tune in and make sure that David is getting all your questions and stuff for that. Also, I want to tell you this. Remember, certification is the key to participation, and we look forward to your applications being submitted. I want to tell you to please have a great rest of your day and stay tuned to our calendars. Make sure you're tuning in to WMATA, making sure that you're checking our websites and seeing all the great opportunities we have for you to bid on, as well as the activities and outreaches that we'll be hosting and participating in. Thank you, everyone, and I hope to see you soon. Take care.
That concludes our presentation. Thank you. And we look forward to seeing you on February 29th. Everyone have a great day.
Thank you.